Okay, let's move back to the markets if we can. It's a big week for the markets, of course, with the Fed meeting on Wednesday. A rate cut expected, of course. How much? Let's bring in Jeff Sica. Great to see you this morning, Jeff. We're not seeing, I don't think, any market reaction to that second assassination attempt, what appears to be, against Donald Trump. It's all about the Fed this week. What are you expecting to see from the panel?
Well, Ashley, I think, when it comes to the markets, ignorance is bliss in what seems to be this post-apocalyptic Mad Max movie that we're living in. So far as I think it would be a much different story if this suspect got a shot off. Thankfully, he didn't. And yes, the investors right now are 100% zeroed in on the Fed and what the Fed is going to do as far as interest rates. We're practically 100% sure that they are going to cut interest rates. But the question is it going to be 25 basis points or is it going to be 50 basis points? And the way I see it, and what investors will be really focused in on, is if it's 25 basis points, there'll be the investors who question whether 25 basis points is enough to keep us out of a recession.
Right.
Or if they cut 50 basis points, is there going to be an alarm reaction because investors will think that potentially there is something greater like what I think, which is a credit crisis in the making. So that's what's going to transpire this week.
You can't win for losing when it comes to the Fed. It's either one or the other. Very quickly, almost out of time, Jeff, should investors think about gold? It's at record highs.
Yeah, I mean, we've had a 20% appreciation in gold. I've liked gold. And as I've said, we are in a post-apocalyptic Mad Max world. So gold has been the safe haven for investors with the geopolitical risk, with the potential of more inflation. Inflation might come back. The dollar might get weak. I think that gold is going to have another surge, another leg up, and I would buy it even at these prices.
It was quick, but it was always very valuable. Jeff Sica, thank you so much, Jeff, for your input this morning.